Good morning, Steve Free in Chicago with the morning grain comments. Markets are mixed overnight with the bean and meal a little bit higher, wheat higher, corn a little bit lower, and soybean oil lower. Each market has its own bit of fundamentals. In the bean complex, we saw that delion, meal, palm oil, and soybean oil prices are all lower while beans are a little bit higher. There continues to be concern on the demand side as just how much China is going to buy of beans and also of veg oil. Palm oil prices continue to drop on concern about Asian demand, considering some of the lockdowns in China and also the slower economy in China. Some July data came out yesterday suggesting that the Chinese economy is worsening instead of getting better. Also in South America, we saw that meal and oil values are lower than U.S., and that Argentina new soy peso policy increased farmer selling. That reduced Argentina's soybean export price, and China took advantage of it, bought 10 cargoes of Argentina soybeans. We also note that in the corn market, kind of a mixed trade yesterday. We rallied on talk of a lower U.S. corn crop and also the possibility of Russia reevaluating their export corridor with Ukraine policy. Putin was saying that most of the grain is going to Europe and not poor countries, and they may try to change the destination of the Ukraine exports. The problem is that 70% of the grain that's being shipped from Ukraine is corn, and it's going to mostly Africa. 16% is going to Europe, and some of that is being rerouted also to Africa. The question mark, though, in the corn market is both domestically and globally, what is consumer demand? We've seen various companies here in the U.S. talking about increased inventories, lower stock orders for new items, and the consumer is spending less because of inflation. And in the wheat market, we're trying to rebound from yesterday when we rallied sharply and gave half of it back. Again, the wheat market is concerned about wheat exports out of the Ukraine corridor, but I think mostly it's focused on a drop in global demand for wheat, and also that Russia has a steep discount of wheat versus U.S. prices. The wheat market might be supported by weather, with our weather guy talking about La Nina continuing through January, which could reduce rains across the U.S. southern plains for planting. But I think that the wheat market continues to be stuck in this sideways trading range. We do have a USDA report on September 12th. The trade's looking for a little bit lower corn and bean production numbers, but the managed funds continue to be pretty bullheaded about the fact that they do not want to be long commodities, especially grains, because of these concerns about the economy, and that the only reason they would come in and buy is if there's a South American weather problem. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day.